think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. I'm here in the flesh with the man himself, Brien Lundin. How you doing today?
Doing great, Darryl. Great to be with you again.
Yes, indeed. Yes, indeed. So we're here at the Rural Symposium. What are some of the things about gold and the macroeconomic, environment that you're considering right now?
Well, I'm looking forward to the Fed actually starting to cut rates, and I think the market's starting to look forward to that. You know, we were expecting, or at least the market was expecting at the end of last year, for there to be about 5 or 6 Fed rate cuts this year, and that didn't happen. And you would have expected that gold prices would have dropped, like $200 an ounce as people began to realize that we weren't going to have that many rate cuts this year. Instead, gold added about $300 an ounce because we saw central banks come in to buy it. We saw, in particular, the People's Bank of China come in and buy a lot of gold. We saw a lot of Chinese citizens buying gold, which was weird because they don't usually buy gold on an uptrend, but they did this time. So that drove the price up, and it really kind of surprised everybody. Now we're in a situation where the Fed is likely going to have 1 or 2 rate cuts this fall. And the markets are going to start pricing that in really soon if they're not already. And yet the gold price is, say, $300 higher at a much higher level. And we still have that big factor of rate cuts coming in. So I think we're in a really good place now.
Mm-hmm. That's good. That's good. So last year we spoke, and I remember when we spoke when you were here, and there's a lot of talk about the BRICS and everything, and then you kind of you sent out to your newsletter subscribers. I remember reading the newsletter, and you was like, "Hey, just calm down.
Yeah,
no need to be fearful." And we did see like a drop in the price of gold after that. I believe it was last September, October. And then now we're at all-time highs measured in dollars again. We're around that, And so do you see 2,300 being like the floor for gold, or what floor are you seeing here?
I think that's a good point because, we got up to over 2,400 and then it fell back below. And people were looking, a lot of analysts were saying we're going to drop below 2,300 and then we're going to go down to maybe 21 or even 2,000 again. And gold hung tough at $2,300. It dipped below it like one day by a few dollars and popped right back up. And I think that's a really strong floor right now for gold. And nobody or few people were really expecting the price to start moving right about now. We're going into kind of a typical summertime slowdown, and gold was just trading sideways. And then all of a sudden, it's broken out in recent days, over the last week or so. I think that's the market starting to price in the likelihood of Fed rate cuts. Now that's going to send everything up. It's going to send up gold, silver. It's going to send up the U.S. stock market. Everything's going to get floated up on that anticipation of easier money. But gold, I think, is particularly going to benefit from it. And I think it's, like I said, I think it's in a good spot right now.
Mm-hmm. So transitioning to silver. Silver is above $30 an ounce.
Yeah.
And it hasn't been there in a long time. I had to go back and look at the chart because I thought it hit above it in 2021, but it actually didn't. It didn't close above it. So what are you seeing for silver being over $30 an ounce? We haven't seen this type of pricing in over a decade. And so what are you seeing there?
Yeah, I like silver because it's in this kind of a bull market that's based on monetary concerns, where people are worried about the future of the dollar and its purchasing power. In those kinds of a market, silver has always outperformed gold. Mm-hmm. So I expect it to this time. And in fact, in this rally so far, in this bull market so far since early March, silver has outperformed gold. There have been a few short periods where it hasn't, but it's really kicked in the last few months, and it's really started to outperform gold. I think it's going to keep doing that. I think the big next big mark for silver is the all-time high that it hit twice around $50. And once we get to that point and beyond, we'll be in uncharted territory. And I think the upside resistance is going to kind of fade away at that point.
Mm-hmm. And what do you see for like mining shares right now? So obviously each company's different.
Yeah.
Some people aren't really touching the miners right now. They're more holding on to the physical. So it seems like there's an opportunity there, but then there's kind of like a fear around miners, whether they're profitable and such. But gold's at all-time highs, and so you would think that if you're mining the stuff out of the ground, it's at all-time highs. That makes you more profitable. It helps handle inflation costs. But what are you seeing with mining shares and things like that?
Yeah, the perception is that mining shares have not kept up with gold during this rally. In fact, if you take the major mining indices and you compare them to gold, since this move began, they actually have outperformed gold. They've actually provided some leverage. But it hasn't been as much as we would have expected in this kind of move in gold. So the perception, again, is that they've underperformed. The issue, I think, is that those factors I talked about that have been driving gold, being central banks and Chinese buying, the market or investors don't really understand or can't project that in the future and see how sustainable that is. Mm-hmm. They don't know if central banks are going to all of a sudden stop buying gold. And in fact, the Chinese central bank stopped buying over the last couple of months. So they weren't able to really bet on that. So when we have that Fed pivot coming into view, I think investors are going to be able to project that as being, well, we're going into a rate cutting cycle that's probably going to last at least a couple of years. So we'd better leverage that right now and start investing because they can see that that's going to be sustainable. Mm-hmm. I think we're at that kind of that pivot point right now.
Gotcha. So we recently had a presidential debate. There was a debate about tax cuts and the national debt wasn't really addressed, and we're still like all-time high national debt deficits and such. So what are you seeing in terms of there? Like, do you see the U.S. continuing on this trajectory of higher debt and deficits? Yeah,
I think they absolutely will. We've seen that neither party is willing to cut spending. They can't raise taxes enough to address the federal debt and the deficits without killing off the economy. We can't, at this point, grow the economy enough to address the debt and the deficits. So it's going to continue, and it's going to continue at a ever-increasing pace. Unfortunately, we are in a situation where the U.S. is in a debt spiral, technically a debt spiral. We're borrowing money to pay the interest on the debt that we already have, and that in turn is adding to the debt every year. We're paying over $1 trillion a year right now just in interest on the federal debt. That's more than we spend on national defense. That's not good for anybody. And it's unsustainable at that point. The debt loads for both the government and for corporations right now are so high that they can't be sustained, they can't be maintained at current interest rates. That means the Fed will really be forced to cut interest rates. And that's going to be what's really going to spur the next leg in the gold bull market.
Gotcha. That makes sense. So what are you seeing in terms of like sentiment? I mean, you have quite a few. You got a lot of subscribers, and I mean, even here at the World Symposium, there's like more people here this year than last year, and the price of gold is a lot higher than last year, right? And uranium, and so what are you seeing as far as sentiment with people that you've engaged with, your audience and such?
The people at this event are pretty smart, and so it's easy to gauge their sentiment. They're very bullish, but they don't really represent the majority of the public out there. And I think the public in general is a bit shocked by gold's rise. Again, they don't really understand why or how long that's going to last. And this move in gold hasn't provided a lot of entry points where people can get in. So here the sentiment is great. I think broadly speaking, we have some work to do to get the story out. But again, once the Fed starts cutting, I think that's going to happen.
Yeah, that's good. That's good. Well, thank you for coming on, Brien. Where can people find more about the work you do and everything?
Well, they can go to goldnewsletter.com and neworleansconference.com. At goldnewsletter.com, they can download a free report, the Investor's Guide to Gold and Silver. That's a comprehensive 40-page report. Tells you how to invest in the sector from metals, physical metals, to mining stocks and beyond. So it's free, and we'd love to get that out to people.
That sounds good. Well, appreciate you for coming back on.
Thanks, Gerald. Great to be with you.